Hey everybody. Well, I've already sort of toasted Slope's 18th birthday this morning, but I thought I'd just do it again because, it's a big deal. I guess this begins our 19th year. It seems hard to believe. Goodness. And also, thank you everyone for your solid state novel help. There are 11 very nice reviews there already, which I appreciate. Evidently, Amazon is sold out of the hardcover, and I think temporarily sold out of the paperback, although that looks to be replenished next week. So looks like it's doing all right. And again, thank you for the encouragement and for the very nice reviews. If any of you have read it and haven't left a nice review yet, please do so, because it helps. All right, so let's talk about the markets a bit. I have had 3 losing days in a row, and I'm not going to have a party about it, but I'm totally okay with that. Honest. Keep this up, I'll start to get a little annoyed, but for the moment, it's fine. What we have here, just to review, this is the ES we're looking at with 1 hour bars, is we have this big peak here back on the 6th of March. This was the high point of the month. And that really preceded this wonderful tumble, hundreds of points. And that, of course, terminated on the heels of the bank bailout, the billionaires' bank bailout. And so when the bailout was announced, the market spiked higher, but then Monday, that glorious Monday, I just want to drop to my knees with gratitude. We hit our low, and we did so before the cash market opened. So we bottomed out before the market even opened, and we've been up ever since. Here's the bottom: higher low, higher low, higher low, higher low, and higher high, higher high, higher high, higher high. Up it goes. Now, this trend line is the key, and this trend line was important before anybody have ever heard of Silicon Valley Bank. And we are beautifully positioned here right now. It would obviously help. One thing would help some, and another thing would help a tremendous amount. The thing that would help some is, for goodness sake, could we just back off a little bit? Could we have a down Thursday maybe? I know everybody's chattering about how the investment banks are going to force the market to be at the optimal point for their options, which I vaguely remember was actually 40.65. So we're just about right there now. But it would help if we would back off some. The thing that would help a lot is to end this higher low business. In other words, take out the lows we saw on Monday. That would take some doing, but it would be appreciated. But that's the ES on a 1 hour basis. If we back up to the 4 hour, you can see the bigger picture better. The last meaningful, and ironically it was the biggest because it was so horrible at the time, the last meaningful drop was 2 beautiful months, from mid-August to mid-October. The low low, we call it here on Slope. This was a glorious collapse of about 1,000, it's almost hard to say, 1,000 ES points. Can you believe that? So we peaked here at 4433, and we bottomed here at 3577. So almost 1,000. It's about 900. Tremendous drop. And since then, we have been pretty much range bound. We have been range bound, it's hard to believe, since October 21st or so. The bottom at 3,800, the top at around 4,180. Up, down, up, down, up. And so we're, the trend line I'm sort of obsessed with is this fella right here. Because we finally broke him on this wonderful day, and we've been banging our noggin against that trend line ever since. So that's kind of the wonderful world of the ES. As far as tech, we're in kind of a scary place right now because we are, I've been really focused on this Fibonacci as a means of resistance. And I actually went long May cubes today, but I got out at a small loss. I'm just too much of a nervous Nelly right now because this was a strong push during the day. But we are no higher now than we were, here or here or here or here or here or here or here. So, just can't seem to break down. We started to. It started to kind of ease lower, and then we got this crazy thing going on. But we remain here at the 4-hour level of granularity, and this has been much more of a sweeping range, and we're kind of on the high side of it right now. So it seems hard to believe, but we're basically at the same price level now as we were in July 2022. And July 2022 was, a few $1 trillion ago in debt, and a much rosier economic picture ahead. So, and yet here we are once again. So let's look at one or two other things, then we'll get you on out of here. As far as the small caps go, these took a very big hit with the bank stuff. We got unlike the other two, we got quite close to the lowest level seen in this entire bear market, like so. And we've been recovering here. As you can see, this is not a healthy picture at all. And it's kind of fighting its way back to this level. This level here has been quite strong, and it's actually been diminishing. You can see just the lower highs all the way down. Bang, 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 bang. This is a little bit of a higher low. Bang, bang. And so for the bulls to really start kicking it, they really would have to go above this line, which I really hope doesn't happen. But that's what would be required. But as I say, the general thing going on now is the VIX has been smashed to smithereens. The VIX itself peaked incredibly at above 30. We got to 30.81, and it actually wasn't even that long ago. It was just on the 13th when everyone was flipping out about SVB. So we've gone in a matter of days from 30.13 down to the friggin' teens. Is that embarrassing or what? And let's back up to the 4-hour again. As you can see here, and the peak we had last year back in the aforementioned, and it was actually pre-Rolo, but we got up to 34.88 late in September. And so we are at half, I say again, half that value now. The good news, if you can call it that, is that this is about as low as we managed to go. This is about as low as it managed to get smashed down. Because in the horrible, horrible, horrible mid-June to mid-August rally, and that was a nightmare, the VIX was exactly where it is right now. Like so. So the VIX has gone super, super, super cheap. And I hope to God Almighty that this bottoms out, this nonsense, and we can start to see that wonderful strength again. So I'll just close with my present positioning is just about 25% cash. And I'm in 22 different, actually, I beg your pardon. No, it's even more cash than that. It's over 30% cash. So I'm very conservative right now. So over 30% cash, and the other 70%, not quite 70%, is amongst 20 different 20 different positions, either 20 or 22, but what difference does it make? Suffice it to say, it's quite conservative right now, which is sort of ironic because at this positioning, if I had any sense, I would be 100% in, but I'm not. So we'll see what the rest of the week holds, but it's been a stinky, stinky week so far, but I'm holding to what I've got here with these positions, and the 30% cash stands at the ready. So happy birthday, Slope, and I'll see you guys later.